my name is Dumo Fineface, and I've come to know Crystal Finance for quite a while. They've been of great help in terms of my financial activities. I got to know them about 10 years ago when I was an employee in a multinational company. They assisted me with extra funds to cover up for quick expenditures. And after then, our friendship and partnership grew into when I now became an employer of labor as well. So now I run my own business, and I still have that close connection with Crystal Finance. And they've enabled me to build my business, take it to another level. Mostly we're into construction, contracts and all that, and they've been assisting us with finance to cover milestones and build our own brand. For those that are looking for financial support in terms of business, in terms of investments and all of that, I highly recommend Crystal Finance. I've known them for years, and I can tell you they are reputable, they are honest and on-time delivery, and they always follow up on your business as well, and also give you financial advices where necessary. Everyone that has financial issues that needs some kind of advice, some kind of support, I would recommend Crystal Finance. You come here, meet with them, and they will give you that support that you need. For those that are having financial issues in their businesses and investments, I would highly recommend Crystal Finance. I've been known them for up to 10 years. I would recommend that you meet them, and they will give you all the support you need, even financial advice concerning your business, and they'll be prompt to deliver at all times. In the course of dealing with Crystal Finance, I've enjoyed a lot of benefits. I've enjoyed financial support, on-time response when I need funding for my projects, and also financial advice, which they promptly provided before I go into any kind of contract, especially when it comes to timelines and deliverables. And these are major aspects of my dealing with them that has kept me with them, because it has gone beyond just business, but also they've supported me in terms of advice when it comes to my own business. And I'm sure that every other person will enjoy such benefits when you engage Crystal Finance. Thank you.
Okay. Thank you very much, everyone. Good day, everyone. Thank you for joining us on another session with Crystal Finance. Trust everyone can hear me. Let me do a quick test. Please, if you can hear me, just indicate in the chat box that you can hear me clearly. Can you hear me, please? Participants can type if you can hear me. Oh, great, great. Thank you for that feedback. Okay, we're currently live on our Facebook and YouTube page, so other participants who probably are having difficulty can join us on other platforms. We'll leave our handle in the chat box right now, so you can join us live on those other platforms. The last time we discussed growth fundamentals for Nigerian businesses. For those of us that missed it, you can go over to our YouTube channel and see the educative session we had on the topic. Today, we'll be talking about the reasons why your loan request may be denied. So I'll quickly go over the company's introduction for those of us that may not know much about Crystal Finance. Crystal Finance Limited, Company Limited, is the licensed financial institution. We are regulated by Central Bank of Nigeria, and we render services such as credit and loans administration, treasury and investments, as well as business advisory. In other words, if your business needs a push-up and does not have the financial strength, then please contact Crystal Finance Company for credits and loans. Or if you need to set aside some funds you do not wish to use until a later time, you can fix it with Crystal Finance Company and get very competitive rates on your investment. Also, if you require advice to manage your business, just like we had one of our customers say, if you require advice on other different aspects of your business, then please come to us at Crystal Finance Company Limited. You can reach us on all our social media platforms. We are on Twitter, we are on, okay, Twitter is blocked right now. So we are on Instagram, we're on Facebook, and we're on LinkedIn. We'll drop our handle in the chat box so you can pick it up from there and reach us on. Our phone numbers are definitely on those pages, so you can call us. We'll also drop that here. My name is Nneka Damsadelo, and I'll be your moderator for today's webinar. And as I've earlier mentioned, for the benefit of those that just joined us now, our topic for today is 13 reasons why your loan request may get denied. You are all welcome once again. Okay, so I'll be introducing our speakers for today. With me here, I have 3 speakers who will be talking to us about our topic today, and they will also be answering some of our questions as much as they can take. We'll take some questions in between the session, and then we'll take even more questions at the end of the session. So firstly, I have with me the head internal audit and control, Crystal Finance Company, in person of Mr. Femi Adele. Good afternoon, sir. Thank you for joining us.
Good afternoon.
Thank you. Okay, secondly, I have with me the head finance, treasury, and accounts of Crystal Finance Company, in person of Maiwa Onu. Good afternoon, Maiwa. Thank you for joining us.
Good afternoon, Nneka. Good afternoon, everyone.
Good afternoon. Last but certainly not least, I have with me the Managing Director of Crystal Finance Company Limited, in person of Mr. Imodu Mamudu. Good afternoon, sir. Thank you for joining us today.
Good afternoon, Nneka. Good afternoon, audience. It's great to be here.
Great to be here. And thank you to all our participants. You are all welcome once again to today's session. Thank you so much for joining us today. We do not take this for granted. Okay, so before we start the session, I'd like to mention, if you have any questions, maybe when our speakers are presenting, please leave them in the chat box. Our speakers will pick questions at interval and also answer some at the end of the session. So going back to the business of the day, and before I hand the baton to Mr. Femi, we would like to get your opinion. I'm speaking to our participant now. We would like to get your opinion on the topic today. So the topic says, what are the reasons? What do you think are the reasons? We'll drop a link right now. Let me see, we'll drop a link right now in the chat box. And please, we'd like you to follow the link. We'd like to get your opinion on the topic and what you think, maybe the cause why your request could be denied. You need money so urgently, you approach, a loan company like Crystal Finance, you need a loan and they are just not granting you the loan. Why do you think they are not granting you the loan? Okay. 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 If you have any issues, you can put in the chat box, let us know. Okay. Thank you very much, everyone. So we have a good understanding of our topic today, but right now we will be passing the baton to Femi, who will be throwing more light on this topic. Femi, over to you.
Good afternoon, everyone. I'm here to share some insights on reasons why your credit request may be denied. I would like to say that financial institutions have what you call a checklist, or if you please, a list of requirements which they use to appraise all credits. These requirements have its roots in what we generally call the 5 foundation or pillars of credit. These 5 pillars of credit is fundamental to lending, just the same way as laws regulate human existence. I'm going to be talking about these 5 pillars of credit and closely linking it to the reasons why your loan request may be denied. The 5 principles or pillars of credit are character, capacity, capital, condition, and collateral. I'm going to be discussing, just like I said, 13 reasons why your loan request may be denied. The first reason is negative credit history. Lenders are more comfortable to do business with borrowers whose reputation is not in doubt. Character, you would agree with me, is the best predictor of future behavior. People form an opinion about you or about your business generally based on the character you exhibit. And so lenders also are more comfortable to do business with people or businesses whose reputation is not in doubt. I'll talk about negative credit history. Before a loan agreement is entered into, lenders would conduct a search on the credit bureau portal in order to determine the credit worthiness of the borrower. The essence of this is for them to know if the borrower has not defaulted on his previous loan obligation, and to also know how well he has managed his previous loans. Did he pay as at when the obligation fell due? How many days was his account in arrear of? Does he have any dishonest check in his account? Once they are able to ascertain through the credit check that this borrower is worthy to deal with, the lenders will then form an opinion whether to deal with this borrower or not. I talk about the second reason, which is dubious loan purpose. Dubious loan purpose. The purpose is the reason why the borrower wants to take the loan in the first place. The reason must be very clear. It must be very clear and unambiguous. The reason must be very specific. It must not be speculative. A lender that wants to borrow to finance a fictitious project, or a lender that wants to borrow to finance a non-existing project, is a typical example of someone that has dubious purpose. Lenders might not be comfortable lending to such borrower. I'll talk about the third reason, which is incorrect details. Incorrect details. Incorrect details can be presented either knowingly or unknowingly. It could be personal information. It can be business information. It can also be financial information or any other information that is related to the credit. Lenders will typically do a background check in order to determine the true identity of the borrower. Once this is done and it is discovered that the borrower has willfully presented incorrect details about himself or his business, lenders might not be comfortable dealing with such borrower. Thank you.
Okay. Thank you very much, Mr. Femi. I hope our participants are still here. There are a lot of wise words, here. I'm jotting. I hope you're jotting as well. He mentioned 3 points from what I got. He mentioned credit history, dubious loans, loan purposes, and incorrect details. I hope we are noting these things. So if you want to walk up to people, make sure your details are correct. Make sure the loans that you collected in the past, you have cleared everything. Make sure that your purpose is cogent enough. Thank you very much, Mr. Femi, for that. I'll be calling on Mayowa now to take us on some other reasons. It's still ongoing. So Mayowa, please. Thank you very much.
Okay, thank you, Nneka. I hope I'm audible. So just like my colleague has said, there are 5 major criteria used in the analysis of credit. So while character is scrutinized, to see if you are willing to pay, to assess your willingness to pay your loan, capacity is examined to determine your ability to repay. So character for your willingness and the capacity for your ability to repay. So even when based on character, you have the intention to repay, that's actually irrelevant, if you do not have enough cash flow to make your monthly repayments or whatever the periodic timing is. So capacity is arguably the most important pillar of credit. It's really critical to every lender's decision to give money, and the lenders actually, when looking at your capacity to repay, they consider things like your employment status, your income, and then your total debt obligation. So very quickly, I'll just say we're going to consider about 4 points, capacity-related reasons why your loans might be declined. First, we'll look at insufficient income. Now, as a paid employee, you have an income. So this income, when you're looking at borrowing, must be sufficient enough to cover your loan repayment. It has to be enough for these loan repayments to happen with ease. Now, in considering your loan request, your prospective lender would obviously request for your bank statements and just to assess your spending pattern. They want to see what you do with your money when it comes in. So by the time all your expenses have been met, if it appears as if what you actually have left, when you're taking care of all your monthly expenses, if it appears as if it's too low, then that's a likely basis for your loan to be declined in the case of an individual. Similarly, as a business person, your income from your business is where your loan payment is supposed to come from. So when you go and request for a loan, in looking at your ability to repay, you'll be asked questions like, how much sales do you make? The sales you make, is it cash? Is it credit? Do you get cash for the sales you're actually making? What's your cash flow like as a business? How liquid are you as a business? How much are you able to retain at the end of the day as a business? What's your actual income? It's necessary because it's actually very possible as a business to be doing high turnover, high volumes. You look at your statements, you have hundreds of millions going in and out every day, but you're not actually making money in the real sense of it. So I'll give you a very quick example in terms of being a business person who may not have enough income. Business people could have maybe contracts to finance. So you're a business person, you have a contract to finance, you come to us. Let's say it's like diesel supply, for instance. For those who know, you have like room to just put a little spread on each liter of diesel. So let's say you put like a 3 or 5 naira spread on your diesel supply. The tanker capacity is at 3,000. You multiply that by your 3 naira, that's about 9,000 naira, 100,000 naira. Easy for you to say you have a contract and then you stand to make 100,000 in income. But as a business, you need to consider all the other costs that go into actually doing that contract, like paying your diesel truck driver, fueling your truck, maintaining the truck, maybe like your tires or whatever, and then the cost of actually borrowing, the cost of funds involved in that transaction. By the time you net off all of those expenses, it's sometimes it's not really worth it going out to borrow for businesses like that. So a lender can look at all of those things lined up and say, you don't have sufficient income. So while you think that you have, enough money to do this, your lender looks at it and tells you insufficient income and then denies you that credit. So secondly, I'll speak of unstable employment or insufficient employment as it is. This points to your work history for people in paid employment. If your work history is short, like you've only been on the job for 2 to 3 months, or it's unstable, or your work history schedule is full of sporadic job hopping, like you've moved jobs several times in a short period, and you're looking to borrow, you can actually appear to a lender as somebody who is really very stable. If you look at somebody, for instance, who wants to take a loan for 12 months, that's 1 year, and you look at their work history and it looks as if they've switched jobs like 3 times in the last 4 years, it's easy to say that this person doesn't hold the job for long enough. So it might be risky pitching a tent with such a person based on their income. Also, if you happen to work in like an industry or an organization where you cannot predict your salary day, or you cannot predict whether you're even going to get paid this month, that's also termed unstable employment. Some people cannot tell you for certain when their pay will come in. So as a salary earner, if you're going to take a loan, you want to be able to say, oh, I expect my salary on the last day of the month or on the 24th of every month. That's what will be termed stable employment. So in a case where you don't have any of those things, then it's very likely that you'll be termed unstable in terms of your employment. So next, we'll look at total loan obligation as a reason why your loan can be denied. Like Femi said earlier on, when you're making your loan application, there's credit checks done on you as a prospective borrower. So when you come with all your documents and your application, basically one of the first things that is done is the credit check is run on you. If it's now shows up, if it turns out that you do have a lot of loans, or you borrowed a lot, or you've even borrowed too much, it's possible to borrow too much. If your credit check throws that up, then that's the reason why your loan may be denied. Some people are actually credit hungry. So every opportunity to borrow, you find them there. Some people are, all you need to do is say that there's a place for them to borrow and they're already there. Whether or not they need it, whether or not that loan is going to leave them in a better state than before they took it, they're ready to take it. And such things show up in your credit history. So taking too many loans at the end of the day can, put you in a worse position than you started out. If a lender sees that you have that many loans, your loan obligation on a month-to-month basis is so high, they just put that person's loan in a risky candidate category and just kind of put it there to pull off. So either as an individual or as a business, your loans are actually repaid from your free cash flow. So as an individual or as a business, once your income is ascertained by the lender, once the lender says, okay, this is how much you make, they need to consider all the other claims on that income. So you have this income, but what are the other claims? What are the other loan obligations that you have against that income? All of that needs to be considered. All of that needs to be put into account in order to determine your free cash flow. It's only if that free cash flow serves as a good enough buffer that that loan can be approved or even considered to move to disbursement. So there has to be a buffer after all of your expenses go out for your income to satisfy that loan request. So the higher the margin after all these expenses are taken off the income, the more willing a lender will be to deal with you. But if the ratio of your debt to income is too high, then that customer is seen as a high risk borrower, and most likely that loan will be declined, just strictly by the virtue of the fact that there are too many outstanding debts against that customer's name or record. Lastly, business performance. This speaks to the way you're doing as a business, basically. Every lender is generally more comfortable with somebody who comes and seems to actually have a grip on their finances. You come to borrow, but you actually seem to know exactly what happens on your business, your day-to-day costing and your numbers. You are very comfortable with that. every lender is happy to talk to such prospective borrowers. So you come with your financial statements, cash flow statements, all of those things, all those documents, they're analyzed. But if you're unable to actually demonstrate a certain amount of success or credibility or profitability as a business owner, then over a period of time, because I mean, it can be unfortunate sometimes, but if you're not able to show any credibility in terms of handling your business and your finances, then it reduces your likelihood of actually getting a loan. If you have low revenue, when these numbers are now looked at in total, if you have like low revenue and frequent cash gaps as a business, almost every time you guys are like really dry, no cash, you always have to step out and borrow. That points to poor business performance, and it's very, very, huge red flag, and it's the reason why a loan may be denied. Lastly, as a business, you don't have enough cash for day-to-day operations. Any lender is safe to say that you're not in any position to make your monthly repayments when they fall due, and it's going to be a big reason why they just rather decline the loan than approve. So I hope, we've been able to understand with the 4 field points, capacity-related reasons why loans might be declined. If anyone has any questions regarding this or any other questions, you can drop in the chat box and we'll address them. Nneka, over to you.
Yeah. Thank you very much, Mariwa. Okay, so that was four reasons why your loan will probably not be accepted, why it will be denied. So one thing I got from here is if your business is not performing well, if your revenue is down, if it's low, then you may not be given any loan. I mean, you have to do very well in your business. You have to prove that your business is doing well. You have to prove that you guys are on top of it. I watch, there's a program I used to watch where they give out loans to people. You have to come and defend that your business makes, so and so amount of money. So these are things that we do. We check all of these things, and we check your books to be sure that, your business is performing well before we can say, okay, take our money. If not, I mean, and then she's talked about sufficient income. I think that would speak to salary earners. Yes, she talked about that. So you've got to be making enough to want to take so much. You cannot be earning 20,000 and be looking for 5 million. It won't work. And then she talked about unstable job history, people who cannot stay in unemployment but require money. It might be a bit difficult for you. It depends. I think it does depend. Then total loan obligation. Okay, so right about now we will be answering some questions. I will pick some questions from the chat box. I have here, sorry, my eyes. Ayi Show asked a question. He said, wondering how that can be rectified. Can a customer be given a second chance without seemingly being dubious? I think she's asking a question on the part where Femi said dubious loan purpose, the dubious loan purpose. So she says, can that person be given? So I've told you this is the reason, but you're telling me, nah, I don't trust that reason. Can that person give a second reason and then be considered? MD, sir?
Thank you, Nneka. Thank you, the audience. I probably will attend to some of the questions, but maybe before I go into the question, just set some framework. The business of lending and credit is actually an art. You can see it as a skill. The more you know it, the better you are in it. But even in the art, there are science to it. You don't just do it haphazardly. And that's why the topic has been crafted in the way it is. It's 13 reasons that have been brought up. It doesn't mean that the 13 reasons are universal. This is probably dependent on the speaker or the person who has put it together. But the 5 pillars under which he has grouped each of the reasons into are universal. It's not what is dependent on an institution. I'll also reiterate that different players play in different industry within the financial institution space. So you have maybe the commercial banks, you have the other financial institutions like the mortgage institution, the finance company, the microfinance. When we look at credits and when we choose to do credits, different criteria might be more priority to us. I'll give an example. For the commercial banks, for example, maybe they might hold capacity strong because of the space they play. And for other financial institutions like the microfinance bank and the finance company, maybe what might be key to us is your character. And when we say character, that's because most of our loans are most times not collateralized. We lend clean, we lend not because of collateral. So it means you are due to have a loan, or we will consider you for a loan, and the first currency we consider is your character. The business of lending is made easy if everybody walk the talk. So on answering the question, if anybody probably has a character defect, should we consider the person or give him a second chance? Like I have elaborated, character is the first key pointer to us. It simply means if you have a reason to either lie or about your past credit history or wrong information so that you can get the loan, or any other thing you have put that is incorrect, that is a pointer to us, to character. The first thing first is it's a no. If you try to ratify that, that's an afterthought. So if there's a character defect in any way, anywhere at all, to us, it simply means don't deal with that person. So most likely, if we sense character defects in your application, there's no second chance. And because really, when we talk about, we're dealing with money. I don't say other people's money, but at the end of the day, we know that, like we always say, leverage shifts when the money changes hand. While you're asking for the money, you are ready to do anything. But again, once the money is disbursed to you, the leverage shifts, and then the borrower becomes the key person, and it is the lender who is running after the borrower to ensure that that money is paid. So really, you don't want to run after a borrower who probably has a different character, and you know that he will always lie to you to say, this is the reason I've not paid. So before you actually disburse, everything must be intact. So once there's a character defect, it's a no, it's a closed shop. That's my opinion. I hope that answers the question.
Yes, I think she was trying to say, okay, that it was incorrect details, but at that all those are still grouped under character. So yes, I believe. But let's confirm from AE. AE, did we answer your question? I hope we did. Okay. Let's take another one. Can loans be given to individuals without a credit history? So she's speaking, okay, so I've not borrowed at all, but I want to borrow now. I don't have any sort of credit history. I've not borrowed before. Would that be considered? I think that's straightforward.
Okay. When we speak about credit history for us here, that's in this climb, we have a credit bureau where every lender goes to check a prospective borrower's previous performance on loans they have taken. And that actually is a pointer to character. So really, if you've never borrowed before, it can be assumed that it's your first time and you probably don't have a defect character. So yes, you are good to be lent to. So it means you don't have, along that line, when we use that to check your character, you don't have a character defect along the line of performance of previous credits. So other criteria will now be what will be applied to you to know, oh, can she or can he qualify for the loan? So capacity comes in, the conditions around the credit comes in. It depends on the level of risk. If there's a need for additional comfort, that also comes in different criteria that they will use. But if it's just that, if you don't have previous credit record, are you qualified? The answer is yes.
Okay, thank you very much, sir. Okay, we're not done yet. Let's go back to our presentation. I'll call Mr. Femi now to take us on some more reasons why our loan may be denied. Mr. Femi.
Thank you very much. I'll talk about the third pillar of credit, which is capital. Capital simply is the owner's stake in the business. It can be in form of equity, that's the contribution of the owner to the business. It can also come in form of retained earning, which is the profit made that is plowed back into the business. The eighth reason why your loan request may be denied is what I have called owner's stake in the business. Lenders are generally more comfortable to deal with businesses or promoters of businesses that have real stake in the business. They are careful not to borrow to those that we may call briefcase entrepreneurs who does not have real stake in a business. These people also do not have real stake in the business, and at the slightest occurrence of any unfavorable business climate, they are nowhere to be found. There are people that we can call hustlers, who do not have real stake in a business. So when the business is not doing well, they are nowhere to be found. Lenders are careful not to borrow to such parties. I talk about the ninth reason why your credit request may be denied, and this is under condition. Condition as the fourth pillars of credit refer to the loan terms or any other economic condition that may affect the borrower. The ninth reason, which I have captured why your loan request may be denied, is owner's literacy level or management of the business. You will agree with me that requesting for a loan can be likened to pitching for a business. The borrower must demonstrate in-depth understanding of the business. It must also be able to present the business properly to the lender. The borrower must show proficiency in sales and marketing skills. The borrower must also have basic financial literacy skills. It must have basic communication skills. These are the skills that it brings to bear on the business. And so lenders will be more comfortable to lend to businesses where the borrowers demonstrate in-depth understanding of the business and have in-depth knowledge of the business. I talk about the 10th reason why your loan request may be denied, and this is industry concern. Industry concern. Some lenders are more comfortable lending to certain industries than others, and the reason for this is not far-fetched. Some industries are considered high risk by lenders, and so if you play in such industry, your loan request might be denied by lenders. Secondly, Some industries are tightly regulated by government. So if a business plays in this industry, because of high rate of regulation by government and frequency in policy changes, lenders might not be comfortable borrowing, lending to businesses that are in this category. I talk about the 11th reasons why your loan request may be denied. And this is business and counterparty risks. Business and counterparty risks. The counterparty is the other party that you are doing business with. As a borrower, your business may be doing very well. But the people that you are dealing with, or the people that you are transacting with, might not be so good. So when such businesses approach us and we look at the people they are dealing with, or the industries they are dealing with, the industry they are transacting with, if such industries or such counterparty poses high risks, lenders would exercise restraint and they might not want to lend to such businesses. I talk about the 12 reasons why your loan request may be denied. And this is general economic condition. General economic condition. This speaks to the prevailing economic condition. You will agree with me that during the period of economic downturn, lenders would exercise caution. And this is not their fault. It is because of the economic downturn. Nobody wants to lend when the economy is not doing well. So during this period, lenders might exercise restraint and will not lend to borrower. I talk about the 13th reason why your loan request may be denied. And this is under collateral. Collateral as the 5th pillar of credit refer to the asset pledged by borrower as a means of loan repayment. Collateral can either be movable assets, in which case we have equipment, inventory, and receivables. It can also be immovable assets, such as land and property. 13th reason why your loan request may be denied is what I have called additional comfort. Additional comfort. When lenders perceive that there is inherent risk in a transaction, and that risk is considered very high, they may request for additional comfort, which may be in the form of personal guarantee of the owner of the business. They can also request for independent personal guarantor as a means to secure the loan. They consider this as lending to reputation, because in business, reputation is the only currency that matters. So the business that they are funding is high risk, but the financial situation of the obligor or the borrower is very good. They can ask for the personal guarantee of the borrower as a fallback or a secondary form of repayment. In conclusion, there could be many other reasons why your loan application may be rejected by lenders. Most lenders really want to know the answers to these 3 questions. Can you repay a loan? Can you repay a loan speaks to your capacity Do you have the ability to repay the loan? Do you also have enough capital to repay the loan? Will you repay a loan? Which speaks to character. Can they trust you enough to hand you that loan? What will you do if something goes wrong? Lenders are risk managers, and they would always want to ask what a borrower will do if the business transaction fails. And this speaks to collateral. A borrower who can successfully answer these three questions will greatly improve the odds of qualifying for a loan. Thank you for listening.
Thank you very much, Mr. Femi. Well said, well said. So can you repay? Before you go collect a loan, can you repay? Will you repay? What happens if something goes wrong? Those are very, very important questions we should ask ourselves as individuals, as businesses, before we go ahead to approach any lender to collect a loan. Okay, right now we'll take even more questions. I have one here in the chat box. Jolade from Jolade says, is there a way to know if my business is deemed high risk? Is there a way to know if my business is deemed high risk? Does any of our speaker want to take that question? How do I know?
Okay, Jolade, let me just say, answering your question straight. There are different criteria to use to know whether your business is high risk. Like the speaker said when he was speaking, first of all, a business may be viewed risky because of the knowledge capacity of the key mover or the prime mover. So if you come to a lender with a business proposal, and then by the time they are probably speaking and having a chat with you, you seem not to have a clear grasp of the business you want to do, or you seem not to even know much about your business. So he spoke about the literacy level of the borrower. Instantly, both the business and the borrower will be termed, oh, this is a risky business. Again, when we look at the financials also, financials will also be pointer to the business is risky. How you run your business, if it's more about borrowing. He spoke about capital. Capital is cushion for losses. So the first defense any business has to protect losses is their capital. So when a lender looks at your finances or your financial and says that, look, you really have no stake in this business, you're not putting your own equity into the business. Everything you've used to grow the business is funding, borrowing. It simply means if anything goes wrong with the business, you don't have anything to, the lenders or the financiers don't have anything that will cushion their losses. All the losses is transmitted to them. So in that regard, yes, the business may be deemed high risk, what the financial people will call leverage. If your leverage is too high, then that business is deemed high risk. The industry you also play in too, immediately can be classified high risk. Now some industry, everybody knows that probably the way they do their business is thin margin and then a lot of turnover. So if there's any significant costs that is brought to bear on that business, on a thin margin business, automatically you cannot cover that cost. Either the cost is imposed on you, either via regulation. If there's a new regulation that means that you have to adjust to certain ways of doing business, and then to comply with regulation, we know that it costs a lot. And then you're in a thin margin business and you have to comply. We know that automatically the cost of compliance will erode your margin. So immediately when a lender sees this, they immediately say, look, this is a high risk business. So business could be categorized as high risk based on different things. We look at your financials, we look at you as a person, how well or how grounded you are in the business you do. We look at the industry you play. We look at regulation, and that's what he speaks to. We look at the capital you have, the pushing, your own stake in the business. If you believe in any business, then you should have a high stake. If you don't have any much stake in it, then it could be classified as a high-risk business. I hope this answers the question.
I'm sure it did. Thank you very much, sir. So I have a lot of questions, under the credit worthy. People want to know credit worthiness. I have from Shemoni, I have from another anonymous. They want to know, okay, so let me take this. This anonymous is more detailed. It says, what if I used to default on loans in the past, but in a few years or in a few months, I have been paying up? Is my credit history destroyed? How do I correct this negative history if it means that it's destroyed?
Okay. Maybe let me try and answer that. Normally, when you look at events, things that happen much in the past, it doesn't have as much weight as things that happen in recent times. So most times when you look at scenario, when you look at trend, people pay more attention to most recent trend and less attention to the past. But if there's a credit search on you and there's a discovery that in the past you have serious loan defaults, but in the present you've kept very good record, I'm sure what the credit officer will probably do is to inquire what went wrong in the past that you were unable to meet your credit obligation. It could be that, oh, a significant event happened that took me off my plans, etc. But I weathered the storm and I kept making payments. That is a pointer to good character. You didn't abandon the loan. So people can come to, we all have projections, we all have how we want to do businesses, and then anything happens. In contract, they will say force majeure, what you don't have control over, it happens. At that point, when such thing happens, what normally most people might do is just abandon the credits on the lender. But for someone who didn't do that, and then over time, look for how to pay it, and then you came out of that, to me, that's a pointer that you have very good character, then you should be rated high. So really, if we see this sort of trend, most likely it might not be a negative report. Rather, it could be seen the other way, that you stick to your words, and then it's a positive report as a pointer to character. I hope this answers it.
I hope we're able to answer your question. Thank you very much, sir. Shegun Oni, I hope we're able to answer your question, and my anonymous. Okay, let's see. Right about now, our time is fast spent. Ladies and gentlemen, thank you so very much for joining us today. Crystal Finance will sure be having even more interactive session. And we'll be very glad if you join us. You can keep tab with us on all our social media platforms and our professional platform, LinkedIn. We are on there to respond to any of your queries. We are on there to render our services to you at any time. Our office is located in Yaba, Alagomeji. If you require any assistance whatsoever, send us a DM. We're just a click away from you. I appreciate everyone today, and thank you so much, our speakers, for the educative session, and then thank you to all our participants as well. See you on another episode. Have a great day, everyone. Thank you.
Thank you, everyone. Thank you, Neka. Wish everyone a lovely weekend.
Thank you, sir.